Are there any myths? I mean, you teach classes on this, you meet with a lot of families. Is there any myths that you hear people, say, hey, well, I heard this about a reverse mortgage, and you're like, yeah, that's just not the way that it works.
So one of the main myths is like, well, the bank's going to take my home. Every client that I talk to, every senior, even their children, they're like, well, the bank's going to take home. If they're late on their property taxes, they're going to be late on their insurance, the bank's going to take the home away. That's a myth. Now,
can we talk about, let's talk about property taxes and insurance specifically. So in a typical mortgage, many people, I'd say most people, incorporate that into their mortgage payment, right? They escrow their property taxes and insurance so that those are made when they make their monthly payment, so they don't think about that too much. With a reverse mortgage, how does that work with the property taxes and insurance?
Yeah, so great question. So you have a couple options. So one is, you can still pay your own taxes, insurance. It's not included in the loan.
If you want. Yeah. Okay. Do you have the option of escrowing them and putting them in?
It's not an actual escrow. What they do is they take portion of your equity, put that funds to a side, and it covers your tax insurance for you, which is called life expectancy set aside.
Okay. So,
for some people, it's an option if they want to choose that. If they have enough equity in the home, they can have that option. Now, if they have bad credit, let's say if they were late on their taxes in the last 24 months, or maybe mortgage late in the last 24 months, then it's probably going to be like, hey, we're going to make sure that lease is in place so that you don't have to worry about it for the next 10 years or 20 years or whatever, how long you live in your home. We're going to cover that for you.
So there's a circumstance where they might have to reserve those funds in order to pay the taxes.
Correct.
Got it.
Yeah. Yeah, especially if you're not, because every loan has to go through a financial assessment. So that's what we do is we have to, make sure that you're able to pay your property taxes and insurance. That's one of the most important things in the reverse mortgage loan.
Right.
So if you're not paying that, then we're going to set some funds to the side, and which you'll get a monthly statement every single month to know where your balances of your loan is, where your funds are going. So even though there's no mortgage payments, but at least you know that your property taxes and insurance are covered for you. Gives you peace of mind.
So I would imagine then there could be a scenario where someone has just enough equity to be able to pay off their existing mortgage and do a reverse. But if they don't have the income coming in to cover their taxes and insurance, nor do they have enough equity where they could set up that reserve account, that person may or may not qualify for the reverse,
true.
Right?
Yeah.
Okay.
And that's the toughest part about these reverse mortgages, what breaks my heart, because the equity, these reverse mortgages, all based on equity. So since there's no FICO score requirement on these, it's all based on residual income, how much money is left over after you pay off all your monthly debt.
Right.
So if there's not enough equity to cover that taxes and insurance, unfortunately, sometimes we're not able to help that client out.
Right.
And that's not much we can do.
Now, if they have financial reserves, would that be something that would be considered that they could use for the future taxes and insurance?
Yeah, I mean, if they have other assets and stuff, we can use that. Yeah, okay. Definitely.
Or income, of course, Social Security or pension or other stuff like that.
Absolutely.
What about employment? I mean, I'm assuming some of these folks are still working, right? Still full time, so you could include, employment income.
Yeah, that helps their situation even more. Yeah. So absolutely.
Okay. Well, yeah. Look, to me, this was super helpful because, as much as I'm not the kind of person who's afraid of reverse mortgages. I think that they do more. I think they help more people than they harm. I don't really think they harm anybody. I think you're right. They're not the right solution for every family, but I think there is a lot more people that should consider this option before they decide, what else to do. I mean, I could even see a situation where someone, might, think about, hey, I want to take, I do have some money set aside and I want to be debt free when I retire. I don't want to have a mortgage payment. So a lot of people would take all their reserves and pay off their mortgage so they can be no mortgage. But the reality is that now you have no mortgage payment, but you have no way of accessing that money. At least if it was, liquid over here and you needed it for an emergency or for some life situation or even to live on, as income, you have access to it where once you pay it down on your mortgage, on your house, and you pay off that mortgage, I guess you could go apply for a reverse mortgage maybe later and get it out. But for a lot of people, it might be a better solution to just put a reasonably sized reverse mortgage in place, right? Have a line of credit set aside, keep your assets in the bank as an investment. So now that's growing, continuing to grow if you invest it properly. And where we talked about equity doesn't have its own rate of return.
Right.
So, I just think that there's a lot of strategic situations that people would make different decisions if they understood this product better.
Yeah, and that's all about educating. And it's not about sales. It's just educating people. Even financial advisors and realtors. You talk about classes, which I do, and that is teaching the realtors on how to use these programs to purchase a home. And then that's, if you have a client that's looking to right size, what I mean by that is downsizing or trying to find their home or even upsizing, they can do a heck of a purchase. So purchase a home and no mortgage payments at all.